Hey there. How's everybody doing tonight? Glad to see everyone here. This is Rick, by the way, just so you know who you're listening to. Hello, Mike Peterson. How are you? Richard, how's everything going? Okay, let's go. Let's find us some money. Well, you know what? I'm going to see what I can do about that. I really am. Hey, Bob. Gwen, how's it going? Glad to see you here. Okay, so for the purposes of the recording, tonight is Tuesday, September 4th, 2018. Everyone, welcome. Glad to have you here. Alrighty. So, tonight's topic is going to be pretty much on the T line and that little red squiggly line I have right here. And we'll talk about that here in a little bit. We'll talk about that a bit more. But first, let's take a look at the SPY, and we'll take a look at diamonds, Qs, and IWM as well. So we've got the whole rest of the week to trade and to look at. So I think it's important to know what the market might be up to. Right now, I would have to say that looking at the SPY, I'm quite bullish at this point. I am bullish with a little bit of a, and it is pulling back a little bit here. You can see that we've got higher lows and we've got lower lows, so we're in a little pullback. This is what I would call a PBO, or a pullback opportunity. It's something I might also call just simply profit taking. Nothing bearish yet, nothing to fret about at this point. The market is still trending up very well here. You can see that. So as long as we stay above that trend line, I'm pretty good with it. Fairly comfortable with it. Even if we drop below the T line, I'm still kind of okay. And we're going to talk a little bit more about that tonight, but as the night goes. But you have to. I'm looking at the trend line here, and if we start moving back, we start moving into trend a little bit, and that could give us that buying opportunity. Of course, we need to see those buyers there, and down here, more than likely, we would be below that T-line area. So we take a look at the Qs. How are those little guys doing? Q's about the same kind of chart. We're still moving up here. Here's nice little support right in here. So we could pull back to support. And you can see that would be below the T-line, and that's not, the world's not going to come to an end at that point. Of course, if we get below the trend line here, then world's not going to come to an end, but we'll just have to look at things slightly different for sure. IWM, hanging in there, nothing's wrong with that. It's still moving up pretty well here. I'm going to move that down to right there for now. Actually, no, you know what? I'm going to move this up here where the low came down and these highs are right in here. So right now I still think IWM is still trending. I'm still bullish on it. Still bullish overall. Let's see, did I leave something out? Diamonds. There we go. Let me get rid of all that. There we go. So you can see the diamonds pulled back a little bit. They could have closed under the T-line today. They were under there quite a bit, actually. And then the bulls have propped it back up. We're still there. If you look at the trend, we're still trending up here, and overall still bullish. A lot of times what happens is, you might hear somebody say, well, we're bullish, so you're just gung-ho buying. And you're buying, but the stocks you're in seem to be moving down. So you get a little confused sometimes of, how can this be bullish? I'm buying, the stocks are moving down, and then you happen to see that the chart is moving down as well. Well, there's a difference between bullish on a chart and buyable bullish. There's a big difference in that. This is a little pullback. This is a little profit taking. It is what I would call a PBO, pullback opportunity. But it doesn't mean that there's a buy signal in here yet. We want to wait for that buy signal. I could draw the same picture on the SPY, on the Qs or IWM. Just this is the last one, so I'm just stopping right here. But I could draw this exact same picture. You know, I think IWM was consolidating more than a down move. We're moving down, but still bullish, but now we need to wait for that buy signal right here. One of the misconceptions of a buy signal, in my opinion, over my years, what I've learned, doesn't mean it's right or wrong. I can tell you that I've made more money by abiding by this little buy signal rule. And that is knowing where the buy signal is, or knowing when to buy. Let's see. I'll try to leave these up for now. And knowing when to buy is really simple. It's when it changes direction. So I think over that little purple line there would be about the best place right now. So the buying is not here. And that is, this is something that I think a lot of people start out trading looking at, trying to get that bottom in there, where I think we should wait till it moves up over that area, show that it can rally and hold up here. So we want to move up, and then we want probably a little test in here, and then then you start looking for some buy signals here. And I think that's the best way. Over my years of trading, it's been a long time. It really has. I'm going on 31 years, and you learn a lot in that time. You learn a lot of things that works sometimes, and you learn what works most of the time. And what works most of the time usually doesn't pay huge dividends, but they're steady dividends. And you find something that works that sometimes, and it's those big poppers that you try to go after. Maybe you catch a bottom or something like that. It works once in a while. You make a ton of money. Time goes by and you realize that you made a lot of money, but you've given it all back because you're trying to do that same thing again, where the patient trader waits for that opportunity, and then starts buying on that opportunity. The opportunity is when it's moving. It's easier to push a car down the road once it's rolling than it is to get it rolling. So wait till it starts rolling, and then it's easier to trade it that way. One of the things I look for is, I'm going to go to a chart here actually. One of the things I look for is how the T-line is working. Now I want to talk really quick on the T-line. The T-line is just like any other indicator, and it probably should not be something that you live and die by. I wouldn't do that. I love the T-line. Geez, I'm the creator of it. Of course I love it. But it's not everything on a chart. In fact, I could take the T-line off this chart, and we could look at what we'll be looking at tonight. I've got a list of charts here that I went through and looked at. We're not going to get through all 39, I'm pretty sure. I went and looked at those charts, and I put them up here. And I could pull the T-line off this, and I could pull the T-line off here, and it wouldn't matter. It would not matter at all. What I'm looking at is several scans that puts charts near the T-line in different ways, and then I look through the charts to find the charts that look poised to move higher in the future. In the future, in a perfect world, in the future would be tomorrow, be in it and then up, but we don't always get that kind of game plan there. So one way to use the T-line that I like a lot is what I call a trap. And anybody that's traded around me for any period of time, that I've referred to that several times and you've probably seen different scans that I refer to as a trap. And all a trap is putting stocks in a box, in a tight box. I mean, that's what a trap is. It's a tight box, that catches something, and that's what we're trying to do. We're trying to catch price. We're trying to catch the chart pattern, things like that. And one of my favorite things I like to do is look for the T-line trending. Notice how the T-line is trending up. Another thing I never do, and that is try to be nitpicky. See how the T-line pulled back a little bit? Come on, it's trending up. Things like that. You see how the T-line might be flattening out right there? No, it's trending up. It's trending up until it's not trending up. A simple way to do that, to consider or to look at how it's trending, is follow what price action is doing. If price is below the T-line, that doesn't mean that we're trending down. What it means is there's a drag on the T-line and we could go down. Follow that moving average up here, and again, I'll talk about that in a minute. And when that gets below or crosses below the T-line, that's a pretty good sign that our swing trade is now down. Let me mention that too. I have found over the years that, let me back up a bit. When the T-line was created, it was in a time of desperation for me personally. The desperation was to make money because I was not making money. After a lot of work, what I discovered was when price is bullish, trending up, that the T-line tend to lay across the bottoms. You would see place or times and places on a chart where price would lift off the T-line, but it would come back and then it would lay on the T-line. It would lift off again, just like this right here. It would lift off, but it would come back. And if the stock was going to stay bullish, I found that it laid right on that T-line for maybe a day, maybe for 10 days, and then started to get going with itself back up again. I found the same true in a bearish chart. When the chart is moving down, when price action is moving down, the T-line tend to lay across the tops. So as price moved up, as long as it stayed below the T-line, your trend was still moving down. I was basing the trend on swing trading. Swing trading is generally short term. It really is. It can be anything from overnight. Definition of swing trading is overnight. That starts a swing trade. From there, a swing trade is kind of your own definition for the end. There's people that swing trade for a month. There's people that swing trade for 5 days. People that swing trade for 2 days. So the only real definition of a swing trade is the beginning. The beginning is overnight. Starts a swing trade. If it's during the day, it's not a swing trade. It's a day trade. So what I found was the T-line worked very well with capturing profits on a swing. So as long as the chart stayed bullish, price above the T-line. Okay, so let's talk about this moving average here. Now, over the years, I have changed and played around with that, and believe me, I guarantee you could use the 2 EMA, which was the original. You could use the 2 simple. You could use the 3 EMA. You could use the 3 simple. Believe me, that is not the magic. It really is not. I will tell you what this is, and some of you here know that I like to play with the average of the high. Out of the box, the system comes with last price. So exponential, it's a 3 exponential EMA, but it's measured using the highs. And out of the box, it comes on last. But I like to play with this high. I like it in a lot of areas. So I put it up here. If you don't have this, don't sweat it. You know, if your charting package doesn't have it, again, don't sweat it. That's not the magic there. Don't get your feelings hurt that this program has it and yours doesn't. If you have TC2000, you can make it. It's real easy. 3 exponential high. There you go. That's it. I like it because what happens is it opens up the trap. Let me get rid of that right there. And here is the trap. This would be the trap. Below that red line, down to the T line. So all that is the trap area right there. Now, in this trap area, I'm not trying to get any kind of, sweet little entry or anything. Not really. If I get one, good for me. But the reality is I'm just trying to get that buy in that area. That's what I'm trying to do. Now, I will certainly take a buy on the breakout. For instance, I think Twillo is still a buy. In fact, I did a YouTube video on it after the close today, and it's on my YouTube channel. This and 2 others. And I think it's still a buy. Now, I don't want to buy it right here. I would rather buy it on a pullback. On a pullback that what? Comes closer to the T line. Does not have to necessarily be below that red line. But what this does, it gives me a visual. It gives me something I can see. So I can see that price is in this area. We can go look at Roku. Look at Roku here. See how? Go back and look at Roku here. See how we popped up, and look how Roku was bouncing right in here. See how that's trapped right there? Wouldn't that have been nice? Trading is about risk reward. All right. Again, I'm going to get rid of that box there. That was there for the video I did. So if we're looking at Roku and we pop up here, we go from this low to a high, and we pull back to a low, and we can see that this is starting to make like a J-hook type continuation pattern, right? Well, what I want to do is this is not going to catch every single J-hook continuation out there at all. This is only going to catch, or what I'm only looking for, are charts trapped between the T-line and this high. This is where they might go on a watch list. I might buy them right then. It all depends on the chart, the day, how the market is doing. So as this starts moving up, you might want to be a buyer. Maybe not. Everyone's a little different. Maybe you want to wait till it breaks out here, which you would have been a buyer here. Unfortunately, we can't predict that some sort of gap down is going to happen. Well, Roku is now back on my buy list. And why would that be? Because it's trapped between the T-line and the 3. I'm going to say that again because somebody is probably looking harder at this chart. Here, let me make it bigger for you, okay? Because it's trapped between the T-line and that 3. But wait, it's not really above that T-line. On this day it was. Think about what you're looking at here. Don't try to go right through the needle without touching the edges. Just think about what we're doing here. Another thing that I like to do is think of this as the framework. Like right here. This would be excellent framework. This is the framework. So now what I want to do is I want to look for chart patterns within the framework. Now, come on. Is the frame, let's see here. Is the frame this big or this big? How big are we going to go with it? Are we going to be ridiculous? In other words, is this the framework? No. Is this the framework? Sure. Why not? Aren't we close enough? Remember, a moving average is just an average. It's not anything to get too excited about. It really isn't. It's just an average. Price action is king of kings. The moving averages just simply tag along for the ride. That's all they are. So I look at this and I'm seeing the framework starting to happen here. And now I'm seeing a chart pattern within that framework. Now, we broke out today. That doesn't mean that we've broken out of the framework, because one of the things that I like to do with this, remember what I said, I want to look for, let me see if I can find one. Well, here. Listen here. I bought this one today. I bought some ETSY today. See how it pulled back? We're in that framework. Well, what I want to do is look for one, chart patterns within that framework. And then I want to look for charts that are below the recent highs. Below the recent highs. So here's what we're doing here. It's really simple. I trust me when I tell you that this is the best chart pattern in the world right there. I think that is the best chart pattern in the world. Now, it comes in all shape and sizes. I mean, it can be, you can look at a yearly chart and see that pattern. You can look at a 2-minute chart and see that pattern. You can, but it's not perfect like this. I mean, not that that's perfect. You know, it's not a straight line up. It's not a slight angle down. And it's not a perfect breakout up. It comes like people. Different. But it's still good. So you've just got to learn to look for those chart patterns. And cup and handles, that's a cup and handle. But everybody looks at a cup and handle and you think of something more like this. Isn't that the same thing? Same thing. Exactly. Just a different shape. It's just a different shape. That's all. But it does the same thing. You'll rally. Profit-taking minor pullback is what we're looking for. Profit-taking pullback is just a minor pullback. Profit-taking pullback, and then the trend resumes. That's all we're looking for. So here we are with this high right here. So here's our profit-taking pullback. Here's the framework. If I was to look at this chart, which we are, let me make this really big. I'm going to look at this right here, and this is the framework. I'm not going to look at the tippy top of that candle, and I might not even look at the tippy low of this candle right here. I might not even look at the T-line, because this is already, the T-line's already brought me into the area. Trader Vision, our Trader Vision, we've added some scans in Trader Vision, live scanners coming down the road. And you can get some of these scans right there in Trader Vision. All we're doing, you don't even have to have these moving averages. They're just up there for show and tell. And so we've created that framework. And in that framework, we're looking for those chart patterns. We're looking for charts that are below this recent high right here. And now we want that on a watch list or maybe even be buying it. I didn't catch this till today. And that's not too high. That's not too high at all. Continuation patterns, this is the pattern. This right here is not the money. This is another one of these things I find traders doing, and they aren't making money. And that's because they're trying to catch, you know, the perfect candle, whether it's this one, or this one. And they're trying to ride it up and then basically freak out when we get to this top right here. Oh my God, that's resistance. That's not resistance to start with. That's a chart pattern right there. This is not resistance right here. That is a chart pattern. What is the chart pattern? Well, this is the chart pattern. Up, back, up. There it is right there. Well, again, we're just using this framework right here. And as charts start to move up closer to this top, or after they just slightly break out, now I would not look at this chart if say we got up here, I wouldn't be interested in this chart, except for maybe the watch list. The reason for the watch list is I would want to wait for profit-taking pullback. And then I can start looking for the buyers to step in, and then we can start making money on it. Anywhere in here can be bought, by the way. There's nothing wrong with buying in here. So, again, I'm just looking for a little trap here. Now, the T-line, the the T line is wonderful for both entries and exits if you're going to use it. It's a strategy in itself if you want it to be. Now, one thing I would do that, again, one of these things I've learned over the years, that is that I don't know that I would stay dedicated to it for exits. I don't know that I would stay dedicated for exits. For entries, yes, absolutely, but not for exits. And here's why. Our job is to make money. Our job's to make money. And making money doesn't mean necessarily writing it up and writing it all the way back down to the T line. Don't do that. Because the one thing we don't know, and there's not a soul out there that knows this, is if we start pulling back, let's see here, let's get up here, boom, 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 and we start pulling back. You gotta know too that the T line is gonna, it's gonna travel up, something like that right there. And we start pulling back, we don't know that it's gonna stop there. We don't know that. No one does. It could come crashing right through. So what we want to do is remember to take some profits on the way up. An example is Twillo. I took half my Twillo off today. Now, I owned it in here, so it was pretty decent. I took half my Twillo off. I will consider adding my back to it, but what I did is I totally protected half that trade. I put some cash in my pocket. And that is the ultimate of protection. That's better than any stop in the world. And I will consider buying it if it pulls back. I'll consider adding another half if I think the chart is still going to stay bullish and the overall market is going to stay bullish. I can't predict what the market's going to do tomorrow. I can't predict with 100% what this chart's going to do tomorrow. Okay, so kind of a little secret thing there is it's great to use for entries to help you, to aid in those entries. I don't know that I would be so dedicated to the exit side of it. So as price moves up, forget about the T line. Forget about it. Trade price now. Move into support and resistance. Let price do the work for you at that point. But as far as helping you with the chart pattern, helping you with that entry, then the T line I think is excellent. I mean, I don't think there's anything any better for this category. I mean, we're looking for charts that pull back to the T line. Well, what if charts pull back to say maybe the 10-day simple? Maybe the 10-day simple is right there. You could do the same thing with that. The same type of strategy. So I personally think T-line is best, but that doesn't mean it's right for everybody. I just want you to know that, okay? So I talked way too long here. I apologize for that. I get carried away. I do have some charts, and I'll try to run through them. Please feel free to ask questions. I'm going to just get clicking right along here. If you have questions, make sure you type the ticker symbol in there so I know which one the question is related to. And if you have a question on entry or something like that, I'll be glad to do that. We've got about 30 minutes left, and I'll see what I can do and get that done for you. So I'm looking at Fred here. I kind of like Fred. I like the pair of bullish candles here that turned us around back above the T-line. Notice how we've been below the T-line. I mean, that T-line has kept price below. All of a sudden, there's a change right here. So what I'm looking for Fred is a buy, but I want that trap, right? Well, the trap might be in this area right here. Price moves down. Here's that little red 3 EMA measured on the highs. So if price got below that, and it doesn't have to necessarily always be below it. It really doesn't. If you see a nice chart and it's running up that, then hey, we'll take a look at it. Believe me. So, but for now, I'm looking for charts that give us a pullback. And by the way, pullbacks, this is something too. I catch myself doing this, and I apologize. Is if we start to have a pullback, we draw things like this right here. thinking that we're going to have a 2-day or 1-day, maybe 3-day pullback. This thing could pull back like that. It could take 2 weeks to pull back. But you know what? We're going to patiently wait for that buy signal. And that, let's see, I guess I should make that red, I guess. Keep it red. So you've got that 3 EMA there. It kind of does something like that. You've got the T-line that will do something like that. And now you get that trap in there with a buy signal, and you'll probably have some sort of a chart pattern as well. We already looked at Twilio. Roku's one that I would look at on an inside. Yeah, here's another thing too. When you see a chart break out of the T-line and it pulls back, pay really, really close attention to that. Because once they break out and they pull back, those are some of the great places for entries. That first, second, third pullback maybe, I'm good with that. After that, you know, the chart gets a little long in the tooth there a little bit, and it might be a little bit high to be buying. So when you see that we're below the T-line, we break out above the T-line, look for that pullback 1, pullback 2, pullback 3 maybe. Those are good pullbacks to start looking at. They still have a lot of juice left in them at that 1, 2, 3 pace. So here we are here. I wouldn't be afraid to buy this above the T-line there, all the way up into this area here. And why? Because this is the chart pattern. Take a look at the chart pattern here. Low to a high, to a low, and you can see that J-hook that we're making right there. And a slight little breakout, there would not be anything wrong with that, and it would not be too overextended. Now, if it actually, swung that much, we might wait for a little bit of a test, something like this. So there's your nice little J-hook, test, buy, make money. It's that simple. Honestly, it is. That does not mean we get every chart right, believe me. It doesn't mean that we don't have losing charts. I showed everyone, members in the room today, I showed everyone my trading platform with dollars and cents and everything on it. And you can see I had red trades. They're not all green, but my portfolio overall is up. Here's another one, MDXG. See how we rose up here. Nice. This is what we call a T-line run, by the way. When the chart is running up that T-line, usually I start thinking a T-line run after the 3rd day. So there's 1, 2, 3. Now we have a T-line run going on. And now see how we're consolidating? See how we were under that red line, under the red line? And now we're starting to move up. I'm very interested in this. Very, very interested. And man, I wouldn't be afraid to be a buyer, say above that T-line, in that area right there, just slightly above that high. We don't have to have any kind of trick entry. We don't have to pick the bottom, because I look at this chart, and every chart you want to look at and make sure that you can make money on it. So you simply look at target areas. So, I say this all the time. Does it really matter whether you pay $6 for it and get 40%, or whether you pay $5.20 for it and get 61%? Does it really matter? Before you type, be careful. Be careful, because the person that types first, you're the person that probably never, ever, ever has 40% profit. Believe me, that's what I have found. 9 out of 10 times, the person that speaks first and says, but you'll make 20% more, you're the person that has never seen 40% in your life on a chart. So trust me when I tell you, there is no difference whether you pay $6 here or you pay $5 here. No difference at all. Except if you pay up here, you're actually paying for a chart that's working. And by the way, I anything in that area, if it broke out of that black box right there, that line, I would probably have to wait for a pullback. So right in here, so 580 probably is where I should have used that number right in there. Mitch is one that we might want to take a look at. Mitch is acting pretty good here. It's popped up, And by the way, all this right here, this is just consolidation. This is nothing to be worrying about. Now, if you caught this pullback and you're in it, great. But I look at this and I see a consolidation chart. If we look at a 2-day chart, 3-day chart, 4-day chart, look how that just moves sideways. Weekly chart, that's consolidation. Now we're starting to make a nice chart pattern. So above that $50, and I usually round up or down a little bit, 70 cents. I would say anything above there is bullish. So notice how we go from a low to a high. See how we're trapped in here, all through here. This could have been bought. Pullback, that more than likely would have stopped somebody out. But I look at that as a trap. Of course, I wasn't in it down here. I look at that as a trap. We have a nice little pullback and we're starting back up. And I would look at this as that's that whole box area right there. So I'm actually going to raise that a little bit. Here we go, just above those highs. So any kind of pullback here could put me in it if I choose to buy this one, or a slight little breakout, or that breakout and a pullback, and we started from down here. Remember, this is all about building that chart pattern. Now, if you can catch it down here, great. I think that's wonderful. Let's see, we actually talked about ETSY already. CVNA, this was on our trade idea list today. And so if it's on our trade idea list today, this morning, that means that this candle was not made yet. It was only this candle. So see how that's rallied up there, a couple of bars, and actually 3 bars, tell you the truth, because that was higher. So 1, 2, 3. And see how it pulled back and we started to trap in here? Now I'm interested. So it was a buy today. And look where we came down to. So right in there could have been bought. You'd be in the money. PRTA. Look how that's moving up. Now on PRTA, I look at that chart and I'm thinking to myself, maybe I'll probably wait for a breakout here. But you can see how it gets in there, and every pullback, we're inside that, well, except for right here. This is when it really changed. So I'm talking here and here and here, and maybe even another time yet. But every time it pulls back, it's getting into this trap area and offers a buy signal. Now, again, the whole T-line thing should not be the only thing you look at. We want to look at this chart, and I see some resistance here. So wouldn't it be better to wait till it broke out? So maybe we wait till it breaks out, wait till it dances around a few days, wait till the T-line catches up, and we look for that chart pattern, that trap and the chart pattern above this breakout line. Maybe that's something to look at. KSS. Look at that one. Again, are we in that trap area? Sure we are. Now, were we in it this day right here? I would probably say nah. I'd probably find another chart because I think we could have found a better chart at that time. But all of a sudden the bulls stepped in here, and now, aren't we in that trap now? And look how it's starting to work. Let's see, David. S, I'm in green, looking for a move to 622 from 821. Move is holding in the top part. Are you talking like S, like sprint there? You're in sprint. I think that's what you're looking at. Yeah. So you're looking at a move above 622. Okay. From 821. That must be. You must be looking at that one, maybe. Yeah, there we go. You're looking at that right there. So yeah. Now, what you want to be careful of is it just doesn't, we don't want it to give way. So definitely have your stop in there. But that is definitely one that I would look at for the same thing we're talking about. Let's see, you're in it, right? So, okay, you're in it right here. And I'm looking at that, and I could see why somebody would be in it, or simply wait until it breaks out. Once again, you look at Sprint, are you really going to make that much more money if you're in here, up there, or on that breakout up there? So, but right now, I think it's a nice chart. I think you're on the right track there. Let's see, Rick I. When you put it on your watch list, how do you quickly remember what and you, where you? How do you quickly remember what you were waiting for? On the chart. You know, uh, especially if it didn't pan out right away. Let me add that in there. We could probably put it on the chart tonight. You probably will remember tomorrow. But what if it happens next week? You know, I don't know. Practice, years of experience, maybe. Being very comfortable with knowing what you're looking at. There's people in the room, trading room, that they can type in a chart and I can tell you what they're looking at. So it's one of those things where it being comfortable. And Bill and Ernie are right. One way to get there is to set alerts and, like Ernie says, make notes, which I'm kind of leaning toward what Ernie says. And the only reason is because it forces you to learn. Setting an alert, it's like something does it for you, but I agree it would work. But if you type notes in here, it's real easy to do. You can type notes, and there you go. You can type your note in there, and so when you do that, I don't know. I think that helps you learn that, and then over time, it's just over time, you become comfortable at what you're looking at. Let's see, if you go through the watch list every day, that would be helpful too, Nini. Absolutely. Let's see here. Here's CBOE. This is a chart I'm also liking. And notice I've kind of done that. I've made my notes right here. These are some notes that I have, and I'm not overly interested in buying CBOE down here. Now, of course, somebody else might be already in it, and I think that's great. I think it's a good chart pattern. It's just my choice to wait to break out to the top side of that box. And that puts us over this right here. That's what I'm looking for. I also see inverted head and shoulders being built here, something like that right there. So we could actually even drop this down right here too. There we go. We could do that. You got your shoulder area, head. But I would just like for this to happen. So what this is, let me draw this out a little bit more for you. Is I want to see the breakout. I want to see a pullback and test, and I want to see it moving back up, just like that. And those three little arrows, they might remind me exactly what I'm looking for. Let's see, is that too short a time from what looks like a cup and handle? Is that too short time to form a cup and handle? No, I think I talked about this early on tonight. Most people look at a cup and handle, and something that might look like that. That's a cup and handle too. It's just small. So the answer is no. I don't think it's too short a time personally. I really don't. I just like the trade better up here after that breakout. But yeah, that's like a cup and handle. The actual breakout of that cup, whoops, that's not a very straight line, is it? The actual breakout would be right there. So we break right there. So just about the top of my black line. And that's what I'm looking for. I'm looking for that breakout and breakout of that cup and handle, if that's what you want to call it. And it is. And looking for that trade right there. So yeah. See, that's something. Sometimes we get, we buy posters and we buy ebooks and we, go on Google and we print out, well, this is what a flag looks like. This is what a cup and handle looks like. This is what a pennant looks like. Yada, 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 yada. And we try to put our trading in some, blew that. We try to put our trading in some perfect little box. And it doesn't quite work that way. It just does not work that way. And, we've got to understand what price action is and how price action works. It might throw you to the downside. It might throw you to the upside. It might do all that. But you have to look at what the overall is doing. One way to do that is look at a 2-day chart. That really does help. Look at a 3-day chart. I don't know why. I just skip over 4-day, and I'll go right to a 5-day. But I look at that, and that tells me right there. Look at that. Just wait for that breakout. Be patient. And now I stand a chance, possibility of getting to 136.80 here. So that's what I'm looking at. TSCO. It's another one that once we had this breakout here, right here, we have a breakout. Boom, we broke out. Here's the first pullback to the T-line. And see how it traps it right in there. And then we start moving up. We start making that J-hook. Where the money actually gets made at is from about 89.20 up. This is no money right in here. I see people all the time trying to do this, trying to trade this oh man, let's get a doji. Ooh, the elusive doji, Ay. And they come up here and then they sell it. Oh yeah, they make a profit. The problem is 3% profit does not get you down the road. I can't even talk about that. It just does not work. That just does not get you down the road. Because the first time you have a loss is going to wipe you out. Because losses will be more than 3%. Hands down. Thanks, Nini. So let's see. Richard is saying CYBO, patient pays off, now managing price. Yeah, be patient. We were actually talking about CBOE here a while back, and now we're just waiting. I am just waiting it to meet my criteria. Now, other people, man, you could have made a killing right here. There's nothing wrong with that. That would have been an absolute killing. Maybe in it today or 2 days ago or Friday. That's fantastic. Every trader gets to trade their way. I'm personally just waiting for that breakout. Let's see. TDOC. See how we've pulled back here? We're starting to make that little J hook right here. See how we broke out? We're under the T line. We broke out. And we've got 3 bars here. So we've got 3 bars. This is just like a pullback. Did you know that? That when you have, we're down, we pop, and then we have a bottom that is being supported, and we get 3 bars like a little stick sandwich here. That's just like a pullback. That's consolidation. When this thing breaks out, step back, Jack, and look at that. I mean, she just goes up. So think of that as your pullback, your breakout and your pullback. So we're pulling back. You can see how we're trapped right there. Very nice. And on that bar could have been a buy, but the truth is most people don't buy that bar. I get that. What about this bar right here? What about that bar? That's the bar I would look at. And you are like stupid money now. I mean, that's crazy money at this point. Now that might have taken you out right here. But boy, that's great money right there. Nice T-line run. Okay, what time is it? Oh, we have time here. QCOM. QCOM is one I'm in, and here's the pullback, and now you see it starting to work out its way up here. We're just in the chart pattern right now. It really won't start to make money, although those of us that are in it are good and green right now. Very happy with it. Right now I'm 46% to the green side, and this thing starts to break out, and it starts to rock. I mean, we're in the bucks now. So, any questions at all here? Please don't be bashful. This was today's featured trade idea, ODP. And you can see that how it rallied up. And notice how far it got away from the T-line, and then it started to come back. And now see how it's got trapped in there? That's where you start noticing it. Maybe put it on the watch list. Maybe this morning star signal right here is what got you in it. Maybe it got you in it today. This area right there is what we're looking for. Not necessarily a perfect price of, let's see if I can do this. There we go. Not $3.36. Not even $4.40. It's about taking a chart that you can see the bulls are in charge of, a minor pullback. I think the T-line is a great place to pull back to. I think it's safe. Below the T-line, it becomes dicey. It does. You start messing with the 20, you start messing with the 34, then you start messing with the 50. You're screwed. You get below the 50 if you're still holding it. So I like the T-line because it is still very much a bullish chart. No matter the pullback, as long as it holds that T-line, it is very much a bullish chart. May not be buyable till some time later, but if it stays above that T-line, it's still bullish. Let's see. Hi, Kimberly. Is this also called a flag pattern? Here, I'm going to kill all this right here. There you go. This, yeah. This would be a flag pattern. Here, let me use this right here. So we go from this high. Oh, that is not what I wanted. There we go. We go from this high down. And see how we want touches is what we want. So see how, obviously there's a touch. So a touch, no real touches right there, but that's a touch, that's a touch, that's a touch, that's a touch. This is a touch. I'm not sure I would jump on it, call this a flag breakout yet. Yes, Friday. I would today, however. Yeah. So that is a flag. And here's our move up. That's usually what we look at a flag, and then, down like that there. So, and now we have a change in direction. Yep, that would be a flag. And you'll find a lot of these charts look that way. PGR. See, that's a flag right there. Broke out. There's a flag right there. There's your pull from this point up to here. And there's your pullback, your flag. So a lot of these charts are going to have that in there. Look at this right here. This is kind of a flag, sort of, kind of. Remember, we have to, don't always try to put price in some predetermined picture. Yeah, don't, be careful not to do that. You can call this by a lot of names. You can call it a flag. It is. Here we are up, and I cannot draw a straight line. Save my soul. There we go. See how that would be the flag right there? And there's the breakout. Now, I don't know that I would call it that. I would look at this and call this a little cradle pattern, actually. And then we have a breakout with just some sideways consolidation. Like I said, there's all these things you can buy of, well, this is what a head and shoulders looks like. This is what a inverted head and shoulders. This is what a fry pan looks like. You cook bacon and eggs in fry pans. I would not call that a fry pan bottom. No, I would not call that a fry pan bottom. Fry pan bottom is, you want something flat. You want it flat. Very slight curve to it. That's not a fry pan bottom. Let's see. Where'd it go? There it is. Costco. Look how Costco pulled right back the T-line. See that trap right there? So we're looking for a run, a pullback above the T-line, trap, and then you can buy the trap or buy the breakout, your choice. Trader's choice. There's no right or wrong right in here. No right or wrong at all. We're looking at buying in this area. That's the chart pattern it's making. So you can either buy in the chart pattern or the breakout of the chart pattern. If you go back and you look at all runs, this is something I think everybody should do from time to time, is don't trade. In fact, turn your trading platform off. Step out of the room. Don't get Don't get caught up in any hype or anything, and just look at charts during the day. And take charts, and when you see these runs like this right here, that nice little run, this is money right here. That's money right there. That's money right there. There's money right there. Well, just stop for a second and go look and see what it did to do that. What did it do to do that? And you'll find that the majority of the time, it's all some sort of chart pattern that you could name. You could name. Once you do that, you practice doing that, and now you go live and you can see these chart patterns being built up here. But you'll never see them being built if you're under the pressure of buying and selling and you haven't done that little work. And that little work is just simply turn everything off that would make you want to trade and just look at charts. And when you see, man, that's a good run, I could have made money. What did it do? Well, it rallied up, it pulled back, and it broke out. We have sideways consolidation. We actually broke out right here. Doji and that engulf, that would have been a buy. And there's your run. You might even still be in it right now. So when you find the runs, go backwards and look at the chart pattern. And you'll get comfortable with them that way. Okay, let's see. Yeah, we have just a few minutes. Any questions about the T-line or anything like that? Be glad to help. Glad to help. Rick, does it matter if there are lots and tails and candles in the bodies are pretty much the trap? I stay away from wiki charts. I just personally stay away from them. And what determines wickiness? You know, when you see a wiki chart, you'll know it. I look at this and you can sure see wicks in it, but I don't think it's wiki. I don't think it's too wiki at all. But I tend to stay away from charts. I tend to look for charts that make sense, that are smooth, that just roll off your tongue. When you see a chart, think of it as a conversation, and it just rolls off your tongue. And look at that trend, that just rolls off your tongue. Just stay away. Here, thanks, Steve. BWA has a lot of wicks. Yeah, look at that. See, that has a lot of wicks. Why would I want to trade that? I mean, there's nothing wrong with Borg Warner. I mean, top notch. Absolutely. But it doesn't mean I have to trade it. And is it putting in a beautiful, beautiful bullish, what I'm going to call is a bullish rectangle until it's no longer bullish? Look at that. That's a gorgeous chart. But it doesn't mean I'm going to trade it because it's too wicky. Yeah. And by the way, you know, if somebody says, like here I am saying, I'm not overly interested in Borg Warner because it's kind of wicky, that doesn't mean that Scott may love it. That's fine. Just because I don't like it doesn't mean that it's a bad trade. It just, you know, everybody has their personal trading criteria. And one of mine is try to stay with a trade that is smooth, makes sense, flows, things like that. Let's see here. VRNS. Can you compare run from January through June to August? I'm not sure, you know. What'd you say here? June, March, April, May, June. Wait a minute here. Oh, January, excuse me. So way back here. I mean, that's just a bullish run. And run in August. August. I'm not sure how I would compare that, Gwen. I mean, it's a run is a run is a run. This run is more than likely going to run into resistance. That's for sure. That doesn't mean that it won't pull back, you know, a profit-taking pullback and then continue that run, but I'm not sure how you would want me to compare it. A run is a run is a run. I'm just not sure how to do that. Sorry. Let's see, Scott. What scans are you using to pop up these potential stocks? You know, I have a live scanner that I use. Trader Vision has them. TC2000 has them. You know, you just put together a scan, different scans. Let's see. I don't even know if, I'm going to look at charts like this, and there we go. So see this one. This one's out of it, so I wouldn't think of that as one. But here's one right here. VLO. VLO's nice. So you just, again, you're looking for stocks where they have a high and a pullback, and I want the pullback to be above or awfully close to the T line. This pullback here, I wouldn't be afraid of it. On this candle right here, I wouldn't be afraid of that, because one thing I'm going to do is I'm going to marry it with support, and you can see right here we're right at support. So I might put that on my watch list and just wait patiently. I can do this. I have a scan here that really is nothing. It's just price and volume, okay? And what we can do is just come down here and look at charts. When they meet my criteria, what was that? See, that might meet my criteria. Not today, but on a pullback. Let's see, when you start noticing this, you'll notice it over here when it happens. And what was that? AMD. Oh, here's our AMD. Look at that AMD. Beautiful in there. Fred was one on my list over here. But I'm looking for one that might be set up right now. There we go. VIVE. See, that's close enough right in here. So, I mean, if you just put those moving averages up, you can flip through charts pretty easy, and you can see what. And there's nothing about this. I mean, there's 2,078 stocks on this. Nothing about this that's fancy. It's just volume and price. And just go till you find, what you're looking for. And I'm going to get down there to where, yeah. Huh, Mitch. What was that? Well, ETSY. See, I keep the ones I've already picked out. Oh, here we are. SRPT, this would fall under that category. Let's see, GLW. Yeah, there you go. Thanks, Rick. That's perfect right there. Yeah, that's perfect right there. Absolutely. See how overall it's moving sideways. Let's go look at a weekly chart on this. Look there's your cup and handle on a weekly, which means you could probably not. Well, you can see it on the daily, but you might miss it on the daily. And nice consolidation back to that daily. We're in that trap. That's an excellent chart. Excellent. Gwen, I didn't mean to jump over you there. The reason I asked is I've heard that charts will repeat themselves to a certain extent, and wondering if you might agree with that. Here's how I agree with that. People repeat themselves. Charts are created by people. People repeat themselves. So, yes, I agree with you, but it's because of buyers and sellers. It's what they are doing. That's what repeats. And on that chart we were looking at of yours, sure, you may get a run like, coming up in August right now, that run that from January to whenever, that big long run. But you're going to have to chew through a little bit of heartache first before you get that. Now, you get above that heartache, I think your run is more likely. But to think that I'd go to it, I don't even remember what it is now. To think that this run is going to repeat just like that longer run, well, it might, but I'm going to put bets on that it doesn't. And it doesn't anytime soon, I should say. It could certainly do it in time. I don't have patience for that. I would not wait for that. And I would wait till it broke out over all that heartache. Then I would take a look at it. Okay, so let's see. Scott. I'm not trying to scoot around you, Scott. I want to make sure that, I don't know. We have hundreds of charts or scans that might look for something like this, but got to remember there's other things that go with it. You have to, you want it trending, things like that. If I look at this list, I'm looking at so many charts that, here, let me flip this over, see if I can, see that, you're probably going to have to let me go down about the middle of it maybe, see what happens. There we go. So here's a nice little trending chart, and there we are. We're in that trap here. That's a little wicky, though, I got to admit. I'm not sure I like that chart. Here's ENDP, which I'm long ENDP. I'm up right now 21, almost 22% in it. And look how it pulled right in here, and we started to trap, and then it started to move up higher. Notice price. See how price started to move? We have the low, higher low, higher low. That's time to start looking at it. That has possibilities. Yeah, see possibilities. BMY, that's possibilities. That looks good right there. Oh, you're welcome, Glenn. Thanks. So, anyway, the T line is I'm gonna go back to a chart that looks good. There we are. Here, let's see. Did we look at? Let's get. Yeah, here we go. This is nice. This is another one I'm long in, and I still think this has more upside. And so what we're looking for is we want the T line to be overall trending. I'm not too worried about what it does from day to day. What we want to look for is price that's basically lower than a recent high. So all that price right there, lower than a recent high right here. And we want some sort of chart pattern, something we can identify with. And I look at this, which this is kind of hard to find a chart pattern there other than just consolidation. You have a morning star signal here. Let's see if a 2-day gives us something. There we go. There you are. There's your flag. There's your pop out of the box right there. Just clear as a bell. Absolutely clear as a bell right there. Here's a 2-bar morning star. That's another thing. And then we'll call it a night here. When you're looking at, remember, chart patterns, don't get tied up into the absolutes, the absolute pennant or the absolute symmetrical triangle. Don't get too tied up into that. Don't worry about the one candle went above or the one candle that went below. Don't fret about it. Candlesticks are the same way. You look at this. What do you see there? Remember what candlesticks are like. Think about what they're trying to tell you. They speak to you. Now, what are they telling you? And I look at that. I see a morning star. Now, there's 85 people in the room. I'm the 85th one. 84 people are saying you're crazy. That's a morning star. Isn't that telling you the same thing as a morning star signal? And if you don't like that, go to a 3-day chart, and there's your morning star signal. So just when you're looking at price action, and which price action is candlesticks is price action. When you're looking at that and you're looking at chart patterns, try to listen to what they're saying. Don't try to put them into a neat little takeout box. Just listen to what they're saying. And anyway, I think there's great success when you can speak to the charts and the charts speak to you. Now, sometimes we have a language barrier. That is true. I wish I could talk fluently to a chart, but I can't. Some charts yes, some charts no. And but the better you get at listening to what a chart says, then the better the trader you are. But try listening rather than always looking at. Just take a listen to them. All right. I'm going to check out of here. I want to thank everybody for being here tonight. I do appreciate it. It's an honor. It is a great honor to be standing here. And yes, I am standing. I've been standing most of the day. It's an honor to stand here in front of everybody and talk about charts and to trade. And I hope there's something you can take away from tonight. I appreciate it. Thank you, everyone, for being here. Jim, thanks for recording. We'll see everybody on the other side. Thank you.